For more on how the markets are reacting this morning, we're joined now by Shana Sissel, Chief Investment Officer at Spotlight Asset Group. Shana, great to have you with me. Oil's collapsing. What are your concerns about its impact on the economy?
I think that as the reopening of the economy starts to happen, this could be a short-lived decline. Obviously, there's too much oil in the system. There's no place to put it. And so companies are essentially paying people to take oil off their hands. And that has to do with the fact that there's no air travel really going on right now. Nobody's driving their cars. But as we start to see the economy reopen, there is hope that there will be some pent-up demand here. And I think that, when it comes to supply-demand dynamics like this, there is pent-up demand, and we should see oil bounce back. But there are some really strong secular trends going on in the oil markets globally, and we've seen oil in decline for quite some time. So I don't think we'll see necessarily oil spike, but I could see it getting back to obviously futures and forward contracts being positive again.
But Shana, I mean, the negative impact on GDP, the job losses, how the unemployment rate might be affected. I know you follow the market broadly, but there's got to be concern that this collapse in prices and just a lack of storage space is going to negatively impact jobs in America and GDP.
That is absolutely going to happen, and that's not a surprise. I mean, we have shut down the economy. This is to be expected. The oil markets here have been a huge part of the economy and a growing part of the economy. We've gone from being an oil importer to an oil exporter, so this is a big deal. However, again, demand will come back when the economy reopens. The longer it stays shut, the greater the risk for how GDP will be impacted. I'm very encouraged by the fact that governors across the country and the president seem to understand the fact that we need to start to have a plan for reopening. And as long as that continues and these shutdowns do not continue for very long periods of time, I think that we can rebound and there will be pent-up demand. The longer this lasts, the more jobs are lost, not just in the oil markets, but in companies who have furloughed employees in the anticipation that they'll be able to reopen at the end of a lockdown period. They may not have that luxury if these lockdowns continue for months at a time and through the summer.
So how are you advising clients right now as investors try to make sense of this market?
Well, we're long-term investors, and I know that seems awfully cliche to say, we're long-term investors. However, when it comes to these types of situations, we know that the reopening of the economy results in pent-up demand. If you look historically back at other pandemics that have happened, granted, we're talking about the early 1900s during World War I. We have a pandemic that occurred in the 50s and the 60s. There is always this really significant impact short-term on GDP, but long-term we see a huge spike up because of the pent-up demand of people wanting to consume these things and get back to some sense of normalcy. So as long-term investors, we're trying to stay the course to rebalance our clients' portfolios to be more in line with what their targets are. When opportunities present themselves, like today where the market's down, we're going to be buyers more than likely in the market. So for us, that's how we're focusing. Now, we also focus on maintaining our risk-adjusted returns and making sure the risk in our portfolios make sense. And certainly, if our portfolio target is 30 to 40% stocks or 60% stocks, that's where we're going to stay. We're not going to get more aggressive because the markets are giving us the opportunity. We're simply trying to stay on track and keep our clients on track.
So Shana, but let's talk about some opportunities that exist,
Sure.
Right? I mean, we're still double digits from our record highs back in late February. And so where do you see opportunities? Which ETFs would you be buying?
So I am very bullish on real estate right now. We have rates and mortgage rates at all-time lows. The markets are attractive. People who have been stuck in their house in cities and urban areas are looking to find suburban backyards. My husband and I have been looking at some real estate. This is a trend that our realtor is seeing. So that is an opportunity. So an ETF like GQRE, which is the Flex Shares Global Quality Real Estate Index, is one that I think is attractive right now. As we look at broader economic trends, if you look at the economic cycle, when you go into a downturn recession, traditionally value-oriented types of companies do well. So we're looking at things like FVAL, which is the Fidelity Value Factor ETF. Or if you want to be a little more cautious and keep your risk a little more in line with your expectations, something like QARP, which is quality at a reasonable price. That's the X Trackers ETF. And I am somebody who's a huge believer in liquid alts for risk-adjusted returns improvement. And so I am a huge fan of BTAL, which is the AGF IQ US Market Neutral Anti-Beta Fund. This is a fund that goes long, low beta stocks and short, high beta stocks. And in periods of increasing volatility in the markets, this is a strategy that does particularly well in these types of markets. And
Shana,
that particular
quickly,
ETF has done well.
Just quickly, before we have to let you go, what would you advise clients in terms of the cash that they should have on hand right now? Is it more than a 6-month emergency fund? What do people need to have on the side?
That's a difficult situation to answer. Everybody should try to have a 6-month emergency fund. That's not realistic for everybody. Not everybody has that luxury. Thankfully, we do have a government programs in place that have attempted to soften the blow to families that live paycheck to paycheck. But I certainly wouldn't be someone who, if I'm struggling to pay my bills or I have excessive amounts of debt, would be worrying about what the stock market's doing by any stretch of the imagination.
Shana, we got to leave it there. That's Shana Sissel. She's a Chief Investment Officer at Spotlight Asset Group. Shana, thanks so much.